Moody's, though, has upgraded Botswana's outlook to stable. It's still an A2 rating. What impact is this going to have?
Look, I think overall we need to consider the fact that Botswana's ratings by S&P and Moody's are investment grade ratings. So that, I think, puts Botswana in an exceptional class in the sub-Saharan African context. The only other country, two countries that you can speak of is really Mauritius and South Africa that can typically achieve those kind of ratings. So I think small movements, slight downgrades, slight upgrades and so forth will not really change investors' perceptions. I think they will look at the overall stability of the country and the fact that it's investment grade ratings.
Okay, they may be investment grade ratings, but they vary. Moody's does an outlook to stable, and then S&P makes a decision to cut the domestic currency rating from A2 to A1. Explain this discrepancy in their views.
It's difficult to explain how the two approaches differ, but keep in mind that in 2009 there was a severe external shock to the Botswana economy, and growth plummeted, some mines closed, diamond output fell, and that impact is to some extent still evident in the Botswana economy. However, if you look at the sharp recovery in the diamond sector, that is very, very, very encouraging. And in fact, the IMF recently commended the country on that. The reason for that very sharp recovery again is the fact that if you look at polished diamond prices, they have recovered to levels above previous peaks that were achieved in 2008. So for some reason, the diamond prices have bailed out the Botswana economy. Remember that the fiscal balance is highly dependent on diamonds, and as well as the balance of payments. The interesting fact there is that if you look at the US consumer confidence, that has fallen. And usually there was some correlation between diamond prices and US consumer confidence. However, what has happened now is that China and India buyers have now entered the market, especially gold and jewelry market. So that has really pushed up diamond prices to these extremely high levels, which have, of course, benefited the country.
Jan, what do these ratings mean for the pula, for instance? It's already lost 20% of its value against the dollar. There's already a situation with inflation rising and rising utilities costs and that sort of thing. What does it mean for a country that's doing business, transacting, importing stuff?
Keep in mind that the pula is a currency that's pegged to it's a crawling peg mechanism, but really it follows a basket of currencies. Most of it is the South African rand. About 60% of that basket, 65% of that basket is South African rands, and the rest would be special drawing rights, which is the IMF currency, which itself is a basket of currencies. Now, we all know that the rand has weakened substantially to about 850, 860 today, and in the same vein, because of that currency basket peg, the pula has also weakened. So there's very little really the authorities can do to stem that sort of tide. I think they will just have to grin and bear it. But of course the impact on the country will be, from an inflation perspective, would be negative. Although Botswana imports a huge share of its imports from South Africa, that part may be reasonably stable, but the fact that oil prices would now be higher, food prices would also be higher, so we can look forward to some uptick in the expected inflation rate going forward.
What are other variables that the ratings agencies look at? Because they've already said that despite their varying views, they're confident that Botswana's authorities have a firm grip on the economy, that they're going to manage the deficit that's at 7%, that they're going to stimulate growth within the economy.
I think one concern that S&P has expressed, apart from the currency peg, which kind of limits the monetary policy options of the central bank. The other one is the narrow productive base of the Botswana economy. And we're all aware of the fact that the strong influence or the strong production base that of the diamond sector in the Botswana economy in terms of exports as well as domestic production. That is a concern because although diamond prices have performed very well over the last year or so, the production base is very narrow, which means there's an increased risk of, if there's another drop in the diamond price, that the economy could be adversely affected as it was in 2009.